All right, this is Caleb Barney with Russell Real Estate here, and today I wanted to go over why I think real estate truly is the best investment vehicle for you. So I actually pulled up data from my local MLS, and how I ended up charting it was, let's actually go back here. I actually charted it within a 10-mile radius of my location of where I'm at right now. So just to kind of show you what that looks like, I live in Strongsville. This is kind of where I'm at right here. You can see the radius right there, and what I have actually included on this search was all residential real estate sales within the past year. And basically, I'll pull up some charts here and show kind of why it makes more sense to invest in real estate. And the three main options I hear people talk about, the first option is investing in real estate, the second option is investing in the stock market, and the third option is basically just sticking your head in the sand and holding cash. Just full disclosure, obviously I am a real estate agent, so that is my bias. I do invest in the stock market, have a financial advisor, dollar cost average. I put money into the stock market every single month. So I am not opposed to that. And just with what I do, where my income fluctuates, because I am a 100% commission 1099 independent contractor, I do hold cash as well. So I look at all this stuff pretty carefully. But basically what I looked at here was I ran the average sale price information for that 10-mile radius of my browser location. And you could see if you bought in the beginning of 2022, and you look at the average price home then versus the average price home now, you have actually gone up about $28,000. Of course, this is just a paper gain, but that is equity that you're putting into your net worth there, essentially. So you don't actually realize any of the profits until you sell. And of course, if you're selling, you'll have commissions, title work, and if you did sell your primary residence, even if you were there for less than a year, then you would get hit with capital gains taxes as well. So that is not saying that if you bought in January and you sold right now that you would make that $28,000. It's just saying that this is how much value your home has gone up. So this is just the appreciation for your home. Compare that, so you're up $28,000, which, by the way, say you put down 20% on this $228,000 house, you're putting down about $45,000 to make a $28,000 paper gain. So that's awesome. That's my favorite part about real estate, is the leverage aspect of it. And it doesn't make as much sense if it's your primary residence, but if you're leveraging, basically putting a percentage down and not buying cash for this property, and you're using it as a rental property, that means, say you put 20% down, the bank is covering the other 80%, and really, you shouldn't have to tap into any of your own money again if you bought right, and you'd basically just have the tenant paying down that loan for you. Over time, real estate always goes up and to the right, as you could see here, or almost always goes up and to the right, seasonally adjusted, of course. And basically, if you bought in the right location, hopefully that asset is improving in value for you. So even when you do have to replace a roof or siding, windows, a furnace, air conditioner, whatever the case may be, hopefully you have enough equity in there that you could just use a HELOC or a cash out refi, depending on what the terms are there, in order to pay for those so you're not paying out of pocket. So that's the really cool part about real estate there. You invested $45,000 to go up about $28,000, which, by the way, I did run the actual numbers, because when you're looking at just averages monthly, that's not going to cut it. So I did look at the actual numbers for the sales volume January through October of 2021 and the sales volume for January through October of 2022, we are actually down about $3 million for overall sales volume in 2022, which equates to 0.16%. So we're down a little bit in the actual dollar amount that has sold, but the difference here is that we're actually down 11.2% of the sales transactions. So there's just fewer sales occurring because inventory has been constrained. So when we have less sales making up basically the same total sales volume, we're getting an average sale price increasing about 12.4% year over year. So that's a positive 12%. When you look at the Market Watch data right here showing the S&P 500, which is a general indication, it gives us a general indication of how healthy the stock market is for the United States. And when you look at the year to date, they are actually down 17%. And if you're looking at a 12-month rolling total, you're down almost 16%. So that is obviously not what you want. Stocks were riding high there for a while, but it has definitely come down. So if we look at, let's do a 3-year chart here, you can see there's going to be ups and downs. This was right when everything shut down for COVID, so obviously some panic selling from some people there. But yeah, we're down 17% for the year so far. And again, investing, to me, it always makes sense to just look at a long time horizon. Stock market typically goes up for you as well, but that's something that you have way less control over. If you're investing in specific stocks, which I'm not a big fan of, you don't know what that company is doing and if they're shady or not. So the big one recently was FTX, cryptocurrency, and basically they just declared bankruptcy. So everybody thought they were doing fine until they weren't. You could think of Enron, you could think of all of these different examples where if you're investing in a single stock, that's just putting all of your eggs in one basket. So I do like investing in index funds, but for that too, it is what it is. You don't have any sort of real power on how to make that number go up or down. But I do think that investing in the stock market is still better than just holding cash, which again, I do have to hold some cash just because of the volatility of my profession. But when you look at current inflation rates, we were doing a great job keeping inflation low. The Fed actually targets 2 to 3% inflation. Once you actually start getting below that, they actually don't like that either. But obviously, when you're at your 7 and your 7.7% that we've had for the past almost 2 years now, that's extremely unhealthy, and that just devalues the dollar. So essentially what you're doing is you're losing purchasing power. So again, let's take, for example, that average price home at the beginning of the year. If you wanted to buy that asset that was worth $228,000, you only had to put down $45,000 for your down payment. If you wanted to put $228,000 into the stock market, you had to put the entire $228,000 in. And not only that, because you lost 17% throughout the year, that's losing actually almost $39,000. So you're in the negative if you did that. Obviously, again, it's paper losses. You don't actually realize those losses unless you sell your stock. So, that's just something to keep in mind. But you are down $39,000 for the stock market there, whereas you are up $28,000 and you only had to invest $45,000 for real estate. Meanwhile, if you just had $228,000 held in cash, and we're down 7.7% or up to 7.7% for inflation rates this year, you have actually lost about $17,500 of purchasing power because the dollar is being devalued. It's worth 7.7% less today than it did at the beginning of the year. So, and that's just because the price of everything has gone up. So it's not that the dollar is actually worth less. Well, it sort of is because it just takes more of those dollars to buy the same thing. So you're down 17,500 if you held that in cash. You're down 39,000 if you invested it into the S&P 500, and you're up 28,000 if you bought the average price home in that 10-mile radius for where I live in Northeast Ohio. So again, just backing that out a little here. You know, that's Cleveland, Medina's down here. So I'm kind of right in between it. So that is why I think that real estate investing, and of course not every year is going to be the same, but I think it's the most attainable for most people. They say that buying real estate, is the best hedge against inflation. So when we're in this high inflation environment, I think that real estate actually is going to help you the most. I also love the tax benefits of it, your principal pay down, your passive appreciation of just buying in the right area, your forced appreciation of if you're making renovations. Oh, and by the way, if you're buying it as a rental property as well, you should be cash flow positive, meaning the renter is paying your entire mortgage. Say your mortgage is $1,200, maybe your tenant is paying $1,600, so you are actually making an extra $400 a month too. So that's why I think it is awesome. It's your forced savings account, if you will. And I'd love to chat with anybody who has differing opinions. Again, I do invest in the stock market as well, but I just think that real estate is hands down the best investment that anybody can really get started with and get investing. If you have any questions, let me know. This is Caleb Barney with Russell Real Estate, and have a great day.